Hi everyone. To start off this week, I want to talk about the MAG7. Can the MAG7 continue to drive markets higher, accounting for the vast majority of gains? Let's take a look at the rule of 40 for the MAG7. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the rule of 40 for the MAG7, what is it and what does it look like? The rule of 40 is kind of a benchmark for these firms in terms of growth and profitability. Those who make the cut are usually rewarded very well with high valuations. Those who don't, not so great. And they almost all pass this rule of 40, but Amazon is not doing so great and Apple right on the edge. What is the rule of 40? Combined sales growth and profit margin should exceed 40%. Pretty straightforward there. So if you have growth of 10%, your profitability needs to be at least 30% to make that rule of 40 happy. Interesting metrics, not something that I've heard before, but looking at it here, it does make sense. Top quartile does very, very well. Bottom quartile, obviously not so much when it comes to that rule of 40. So how can you use the rule of 40? Take the last 5 years of sales, last 5 years of growth, and see if it does pass that metric. If they do well, they do very good. If not, then they tend to grow very, very slowly over the years. And does the MAG7 make the cut here? You can see Apple, EBITDA in that kind of 28 range, very, very close with that 10% growth. So very close for Apple, like we talked about. Amazon, not so much. They're below the 20 and right at the 20 here. So very close, but still slightly below. Microsoft, EBITDA, obviously above 40 by itself. So the growth is slowing, but still very strong there. NVDA, obviously off the charts within 80 overall, plus 40 growth, plus 40 sales, continues to be very good there. Tesla also beating EBITDA growth, just slightly below the 20, but well over 30% sales growth. So everything's doing very well for Amazon. And I think it's going to be interesting to see how these companies come out in this earnings season. This is very fitting as we get new EBITDA numbers heading into this earnings. Very impactful in my opinion. And they do give you the hard numbers here. Alphabet at 51, Meta at 63, Microsoft 64, NVIDIA 88, like we said, and then Tesla at a 54. Obviously, those are doing very, very well. And then Amazon at a 33, not so much. And then Apple, 9% plus your 33%, bringing it to a 43. So worst of the group, but still meets the metric. If they can continue to do it through this earnings and through the year, we should be in good shape. If they start to falter, it is going to be a big problem for markets, in my opinion. Looking at fear and greed, we finished the week at a 38. A week ago, we were at a 26. We never did really get into extreme fear on a closing basis, but now we are starting to kind of rally out of it. I think we're going to see a little bit of a continuation here. Had kind of a basing formation for a while, all through December and now into January. If we get the continuation here towards that 50, I think we'll definitely get a few weeks of bullishness off of this push. You can see pretty solid base, and I think we broke out of this structure here. So back into regular fear on momentum, strength turning up but hasn't moved yet, breadth still rallying but hasn't moved yet. And then put call ratio turning down a little bit, regular fear. Volatility kind of hovering in this still slightly elevated 14 to 16 area. We'll see if that turns down a little bit more or not. And then safe haven and junk bonds still sitting in greed. Overall, I think this is starting to turn bullish, which is usually one of the better times to be in a bullish position. And then looking at the AAII survey, we got down to a really low level on the back of this last week, down to a 25, one of the lowest reads we've seen really since October of 22 timeframe, bears all the way up in the 40 range. I think we're going to start to see lower highs on a peak basis, but in the short term, I think this is a great contrarian metric. I think we're going to start to see some reversal continuation into next week. There's just a little bit too much bearishness in markets at a 25 versus a 40. It's usually the inverse. Historical average 37 versus 31. And then looking at seasonality, we're into this kind of really bullish period now. We did get through the 17th, which was supposed to be a little bit of a downturn. We ended up gapping up really powerfully on the Friday session, and now through this period into the end of the month, really the 29th is supposed to be peak period for January, so extremely bullish through that period. And then looking at the calendar here, Monday expected to be relatively bullish. January ends the best 3-month span for the markets here at an 83% positive run through the end of the month, the 31st. And then you can see Thursday also expected to be relatively bullish. In terms of data this week, not a lot. Semiconductor billings, we're obviously starting to get into earnings this week. And then for the following week, new home sales, durable goods, and then the FOMC to round out the January time period. And then looking at the earnings calendar, obviously nothing for the Monday. Monday with MLK Day, and then Netflix here for the Tuesday. Charles Schwab, 3M. 3M's been on a bit of a run. That'll be interesting. United Airlines in there as well. Seagate. For the Wednesday, P&G, J&J, Kinder Morgan, Travelers, fairly interesting. United Rentals, also interesting just to see how the economy is doing as a whole. For Thursday, Intuit Surgical, GE Aerospace, one of the spin-offs of the original GE, is going to be out there. Texas Instruments, United Pacific. Want to see how the transports are doing. If transports are still hanging in there, that should be strong economic growth. And then a few more airlines, American Airlines, Alaska Airlines, and then you have American Express, Verizon, and New Era Energy to round out the week. And then looking at the economic calendar, really not a whole lot for this week. Earnings are really going to dominate the calendar here, but you do have closure for MLK Day. Thursday, crude oils, initial jobless claims, continuing to watch that, see how that's been rallying over the last little bit. And then for the Fridays, the bulk of it with really not much here. Global Composite PMI, Services PMI, and existing home sales. Moving over to Max Payne, this hasn't been super relevant, especially in the off weeks, but the put call ratio has gone up a little bit. We'll see if that continues to prop up markets. It has done so far. Call walls up around 590 and 600. 590, not a huge one though. I could absolutely see this finishing somewhere between 590 and 600, but getting above that 600 strike is going to be fairly challenging. And then you can see top of the puts in here, 601. So I wouldn't expect a huge amount of run to the upside, but a little bit of rally does make sense. Moving over to the charts, looking at the S&Ps here, you can see it was a strong week, nearly 3% on the week. We had a huge down week last week. We did get a very small continuation to the trend here at 57.68. Touched that trend and then rallied up. You can see that trend marks a top here, consolidation bottom here before rallied up, and now we've pulled back to the zone and pushed through this structure here right back to the trend. So honestly, you could have seen this coming probably. Momentum on the weekly chart, stepping back to bullish. We haven't seen that for a while. We'd been stepping down consistently since the beginning of December, and we did go a little bit lower, like I said, on the week before rallying up, and then we engulfed the previous candle. In terms of continuation, you would expect to push at least to the trend here at 60.35, and then a potential push here to 61.48. Based on the continuation, especially if this follows through all the way back to bullish, you could get a couple of weeks of bullishness over the next month and a half. And then looking at that daily chart, just to kind of bring it all together, you can see the trend resistance here, just like we talked about. If we head above there, you got some levels. 603.25 is above it, and then right back to the all-time highs here at 607.81. And then looking at the weekly chart here, you can see we got the big up week, back above all the EMAs and SMAs on the weekly. Momentum hasn't really gone with it yet. You could still potentially see a lower high because we did get that lower low, but we did see the upper ATR bands start to step up with this week's move. Lower bands basically flat here, so we'll see if this continues up here, if it's going to be maybe a little bit volatile over the next couple weeks potentially. And then looking at the daily chart, understand we are still in bearish conditions. Your trailing stop is still sitting at 607.94. Doesn't mean I want to sit and wait for it to go another $10 or so up into that area. Right now, it does look like we're probably going to get there. You can see that double top here potentially. We still have seen lower lows, so you could see double top, maybe lower low. Not impossible with the gap up, gap down potential, but overall for me, I would say I think we're probably going to head back to that all-time high. Moving over to the NASDAQ here on the weekly, you can see we did not engulf the previous week, so the NASDAQ is underperforming on a relative basis. The SPY was flat, the NASDAQ not so much. You can see momentum also flat here, still below the SMA, so I don't think we're quite out of the woods when it comes to the NASDAQ. You still have a lower high set up potentially there. Doesn't mean we can't rally right to the trend and then potentially reject from there. So you could get a little bit of follow through, a big wick. And then if we did get some rejection through these trends, that would be pretty bearish. But if we bounce from here or we get the continuation through this levels, then there's potential here for about 5 to maybe 6% higher. So we'll see how it plays out right here. I would be patient in here, watching those key levels. And then looking at it on the daily chart, you can see we're out of this structure. So we've been in this structure for a little bit. This kind of looks like a really extended bull flag potentially. We didn't get the double bottom that I was hoping for, and there's still potential that it could come down and do that. Really what I wanted to see was rejection from here, hold a double bottom higher low setup in here, right around that 503 area. That's what I was looking for, especially after that big bear candle on the Thursday. Wanted to see it come in here, and that would have been a great setup for a really good long potential. From here, maybe back into the highs, about 6 or 7% potentially. So we'll see. Not impossible, but for now, we're out of the structure, and you would expect that to hold if we did come down and retest. And then looking at those tasty charts on the weekly, you can see we came down to the mid-range, caught a bounce from there. We're back above the 9. That's usually what I work off of. The 8 EMA there at 515.57. If we're above it, we're in good shape. If we're below it, usually a little bearish. So for now, bullish off of that move. Upper bands trending higher, lower bands flat. Very similar to the SPY charts. Overall, slightly bullish. And then looking at that daily chart here, if you go off of these levels, you could argue maybe this is still in check, but if you go off of that one that I was looking at on the previous, not so much. Again, want to see this come back, hold a higher low, maybe that 89 EMA in here at 503.52, pretty much in line with what we talked about, but big volume, big pop here. Want to see it push to that upper band. I think that's potentially in play there at 536.68. And then the upper band, uppermost band there would be 546.84. We'll see if it can get into that range. Moving over to the Russell, big move here on the Russell, nearly 4% higher, just short of it. We're still at the resistance level. 226.02 has been the key level over the past month or so. Broke below it mid-December, tested it here through December, and then halfway through January, continuing to test that zone as an area of resistance. So you got the breakout, fake out, breakout, back into this kind of consolidation range. Still has not broken up. If it does, obviously bullish. If it continues to reject from here, obviously bearish. Momentum step to bullish here. You have a little bit of room on the SMA. So again, I would expect a little bit of continuation. Upper trend, resistance, 2.5% higher. That's what I would look for. And then looking at the daily chart, you can see right in that zone of resistance, 226.02, like we talked about. But you have a fake out breakdown, tested 200, 3 really strong candles back into the range. Sideways choppy. Now we're looking to see if we can get that breakout. If we do, everything looks very strong. If we don't, then you would expect a push back potentially to the lower ranges of this consolidation or the 144 EMA, which is right now at 220.38. Then looking at the tasty charts here, you can see that 55 EMA on the weekly chart was your support at 213.24. Touched that zone, caught a bounce back into the middle of the range. Overall, you're still seeing the upper bands start to trend a little bit higher here, lower bands kind of flaring out. So that's arguably sideways choppy, still bullish conditions with your trailing stop at 206.40, waiting to see if it's going to hold in this zone or not. Right now, like I said, just slightly bullish, but realistically neutral to bullish, and you can see the daily chart still in bearish conditions here. We did just briefly get above all the EMAs and SMAs, momentum slightly bullish, so a little bit of volume coming through on the rally. You can see kind of choppy in there, but like I said, still downtrending on the daily chart. Need to see this kind of hold and get that swing to the bull side, which we haven't really seen on any of the daily charts yet. And then moving over here to the Dow Industrial, you can see we had a pretty consistent down move of about 5 weeks there, of about 6 weeks there, and then the big up move here, 3.7. You could argue this is a little bit of a squeeze out. People were getting pretty comfortable being short. We came to the level at 418.38. Based on my rules, hopefully you took profits if you were short into this level. Once you start to see that level hold, especially into the open this week, you should have been taking profits if you were short into this move and then you ended up holding support, pushed through, could have taken a trade here from 426.20 up to that 432 area. And now we came into the trend zone of resistance. Is it going to reject from here? Hard to say. Right now, everything still looks a little bit bullish. If you're playing off the levels, 432.78 is your support. If you get the continuation move, 441.43 is the next level. And then looking at the equal weighted S&Ps, good move there as well. 4% higher almost, 3.92, very, very good move there. This was a bit of a fake out. We dipped below the level at 173.05 and then we ended up rallying through. You can see momentum stepping to bullish. You like that. RSI still below the SMA in here, waiting to see if we can get to it and potentially through it. Short term, this says bullish to me. Medium term, I think we might reject from here and then get the continuation lower. That would be very interesting. The fact that this SMA is still trending lower, you can see usually that first test is a reject similar to this here. So we'll see how it plays out. Right now, does look a little bit bullish. We're right here at VWAP, right there at the 9 EMA at 180.38. Need to see it push through that level. Right now, you're above it, 179.94. As long as you continue to hold above that level, 182.22 is the next one. Moving over to the SPY divided by the Russell here, you can see 266 continues to be the level. We've rejected off of there for 4 weeks in a row. So the SPY continues to be pretty much in line there with the Russell. Russell outperformed this week. My guess is this is going to go a little bit lower. We've been saying that for a couple of weeks now at this key resistance. And then looking at the NASDAQ SPY, we came back to a zone of support. If it holds in here, we could potentially look for a push back up to that 366. Right now, strong move, kind of bull flaggy, holding support. Want to see this continue higher. Looking for that NASDAQ outperformance in the next week or 2 weeks. Then looking at the SPY divided by the M2 money supply here on the weekly chart, we got the close below the 27.25 level the previous week, below all the short-term EMAs, 21.9, waiting to see continuation of that 55. I still think that that is a potential play, but for now, we did get back above 27.25, so that's bullish. So waiting to see if we get the continuation up back to that 28.50 area. Remember, this is still absolutely bubble territory for me. The only time we've been anywhere close to this zone is back in the 1998, 1999, and then through here to the October, November of 2000. And then that was the popping of the dot-com bubble. And then we pulled back on this ratio all the way down here to the 13s, which was your buying opportunity, rally through here all the way to 2007 prior to the great financial crisis. So understand, absolutely bubble territory for me. And ultimately, I do think this is going to break structure at some point. You haven't seen it quite yet. Probably going to wait for this 55 EMA to kind of consolidate in here over the next couple weeks. And then once that happens, that's going to be the signal to get more bearish on markets. But for now, we're still holding in there. I would expect kind of sideways consolidation, choppy action, potentially higher, but not too much in my opinion. And then looking at the MAG7 here, you can see a bit of a bottoming formation around that 308.50 area. We touched it again this week, rallied back up to this kind of downtrending action. Momentum on the daily chart still a little bit bearish, which is why I think we're seeing the NASDAQ underperform in the short term, but you can see it here, downtrending action, lower highs each time. You could argue double bottom here. Maybe that's why we're seeing the rally up. If we get the break through here, continuation up to here in the 342 area, that's obviously going to be very, very bullish. That move there would be about 6.3%. So looking for that move, waiting to see if we get the continuation here or not. Daily momentum and daily RSI say definitely bullish. Moving over to Apple and Microsoft. Apple was still down on the week, nearly 3%. So Apple continuing to underperform. 3 solid down weeks in a row. It is just barely below 230.28. So right now, based on my rules, I would expect to move to 224.36. Momentum bearish, RSI bearish, volume not good at all, ramping on the selling. So everything says bad for Apple. And then looking at Microsoft here, we got an up week, 2.4, still underperformed markets. Momentum stepping slightly to bullish, volume stepping a little bit higher on that rally. Wouldn't shock me to see this push to 440.72, but for right now, we're still just barely below that resistance area. Tesla, on the other hand, continues to be very, very strong, up 8% here this week, back above 414.50. Again, with my rules, you should be looking for a push back to these all-time highs, back to this 500 level potentially. The most recent high was 488.54. Momentum still a little bit bearish, RSI a little bit bullish, and then looking at NVIDIA, also slightly positive, still underperforming. We're still in this structure here, right at this key resistance, momentum bearish, RSI bearish. If this rejects from here, I would expect a push back down to here, extending this out a little bit. That would give you a potential price target in the 120s, 120.20, somewhere in there. Still have obviously some levels of support, 130 and the 124 level in there, but key zone of resistance, waiting to see what happens here. Moving over to Amazon and Google, you can see Amazon up about 3.2, Google up 2.7, got back above the structure here. This is still consolidation highs for me on Google. Amazon looks a little bit more like a bull flag. If it can break out here, back to the all-time highs, 233, break out from there, then price discovery, we'll see. Momentum not going with it yet. Momentum on Google looking a little bit better, but your resistance for that's going to be 203 if we can get back up to this structure here. Moving over to Meta and Broadcom. Meta once again testing these levels here towards the low of the consolidation, getting back above 602.95 and closing above it. So everything's still bullish there on the price structure, holding this zone. Momentum a little bit bearish, RSI kind of neutral. Still sideways choppy. We've been in the zone since back here beginning of December, and we are still here in mid-January. And then looking at Broadcom, this actually looks a lot better. got below the trend, dipped slightly lower, got back above it. We're right on the highs here, strong close. If we can get the continuation, there's about 10, maybe 10.3% potentially in here, waiting to see if we can break above this structure. I do think that there's a nice potential for a continuation back up to that trend. Moving over to staples and discretionary. Staples is up 1.18, and then you got discretionaries 3.8. So definitely flip to risk on with that move. Momentum still bearish here on staples. Held the trend structure in here. Nice little bounce. Want to see it get above 77.50. That would be great. And then for discretionaries, back above this trend, looking for a push to the next one around 236.10 potentially. Momentum still not great. RSI still not great. But if you get the continuation, that's the potential. If it gaps to here and then continues lower, your next support would be VWAP at 220.84. Moving over to RIOT and Marathon, you can see RIOT was up 11%, hit the target at $14.18, touched that level, and then we did reject from there just a little bit. If it can get above there and hold, that's going to be very good. Momentum bullish, RSI bullish. I think it can do it. Just need to see a close above it there. And then looking at Marathon, up 11%, 11.5 as well. We're right at this kind of consolidation high. If you get the continuation, there's definitely some potential into here, 25 to 27 potentially, which would be about a 40% mover. And I would expect that to go fairly quickly. You do have a little bit of resistance at the 9 and VWAP there at 22.11 or so. But if this gets the continuation out of this consolidation bottom, I would expect it to go quite quickly. Moving over to Breadth. Breadth has essentially recovered here on the 20-day back into the 70s. So that is definitely bullish. We've been talking about it. We were rallying up here end of December, continuation here into middle of January, and now we are back into this more normalized range for 20-day, so that's bullish. And then looking at 50-day, we're at this trend, right? So you had the step up. It's certainly possible that we just cut right through there in continuation, but you do have to respect the trend. It's been kind of in this zone. We held it for a little bit, and then you had the break here, continuation lower. Momentum stepping to bullish. RSI looks bullish. Again, could just be a candle break continuation, but definitely something to watch early next week. Moving over to 200-day breadth, nice move there as well, about 19% back, just barely above the 50 line, just below the 200. Momentum stepping to bullish. Everything says this should go at least a little bit higher. And then we'll see if we hit the key resistance, key trends. You got the 21 and the 55 sitting up there around 70% or so. Either way, short-term bottom, looking for a short-term rally. And then we'll see if it gets any kind of continuation after that. Moving over to the dollar has finally pulled back a little bit for a week, just 0.2, just below the level 109.50. If it can hold below there, might finally see at least a little bit of reversal. It's been a relentless rally since the end of September. Momentum still kind of choppy, still kind of bullish. You have RSI still overbought, but pulling back slightly. Your resistance, like I said, 109.50. As long as you can stay below that, a little bit of short-term bearishness, but the structure is still very, very much bullish, but definitely extended. Moving over to bonds. Hopefully you've been buying some bonds. We finally got a little bit of a bounce here. 2% on TLT, 1.16 on JNK. JNK really didn't pull back that much. TLT absolutely did, down into the 85, 86 area. This is super extended for me. I think this is going to bounce pretty substantially from here. Is it going to happen now, or is it going to maybe lower high and then continuation slightly lower to the 82 area? That remains to be seen, but either way, buying between 82 and 86 is an absolute opportunity, in my opinion, for the next several years. Again, medium to long-term buying opportunities, not so much trading vehicles. Moving over to the VIX, huge down week here, still at the key support. Momentum stepping down, RSI stepping down. We'll see if this holds support in here. If it doesn't, that's going to be bullish for markets. If it holds in here and rallies, obviously that's going to be bearish. So key zone here as we head into the early part of next week. Moving over to my accounts, I got absolutely slaughtered this week. I was messing around with some new trading ideas, paid a little bit of learning fees there to the markets. It happens. I'm not super worried about it. I had a really strong start to the year, so that was probably putting me into a little bit of cockiness, a little bit of overconfidence potentially. Still basically flat on the year, down just $500 or just short of $500, but either way, current positions 224 for the Tuesday for 62 cents. Two puts here for the Tuesday on the Qs, 517, 518. If we start to break some levels and gives me some entry opportunities, I'll do that. if we start to reject from there, going to be patient, just looking to collect my $300 to $400. I'm a little bit short of that at 280, but if I can collect that over the course of the year, we'll be in good shape. Let me know down in the comments section what you think of the MAG7. Can they continue to carry markets higher, or have we seen the best years of them behind us? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.